Thank you for checking out this month's Real Deal Report interview, where our team highlights trusted local partners who help make the journey of homeownership and the home buying process smoother and more rewarding. In keeping with that theme, my guest today is Traci Everman, a loan officer with Flat Branch Home Loans. A St. Louis native, Traci brings 24 years of lending experience to our market, and her ability to build genuine client relationships is second to none. Personally, I always enjoy working alongside Traci because I know our mutual clients are in great hands. She has a gift for clear communication, a true client-first mindset, and she consistently makes the lending process as stress-free as possible. So without further ado, Miss Traci Everman. Good morning, Miss Traci. How are you doing?
Hey, Giuseppe, I'm fantastic. Thanks for having me.
Yeah, I appreciate you taking the time this morning to help out some of our current homeowners, some folks who are looking to become homeowners, and a little bit of information about kind of where we're headed into this fourth quarter. Can't think
I'll
of
do my best.
a better person to line this conversation up with. So, wanted to start out with a little bit about you. For folks that don't know you on the personal level, like I do, of course, or had the pleasure of meeting you, please tell us a little bit about yourself. Would like to know kind of where you're from, how long you've been in the business, and then maybe a few things that you like to do or spend time doing when you're not working, which I know isn't all that often, but
Well, okay, so my name is Traci Everman. I am a senior mortgage banker with Flat Branch Home Loans, which is Missouri's #1 mortgage lender. We're very proud of that, have been 6 years in a row. I've been in the industry for 24 years. So since you were a baby, and been doing this a long time. I'm becoming known now as the mortgage mom because I'm helping a lot of young people buy homes. But no, I'm a St. Louis girl through and through. Grew up in Florissant, the typical St. Louis question. I'm a Hazelwood Central graduate, which I think your mom was too, right?
yeah.
And yeah, I've been living here the majority of my life. I went on escapade to Arizona for a couple of years in the desert, climbing the mountains in my early 20s. But like any good Midwestern girl, came back to St. Louis and have a wonderful family. We live in Wentzville. We've been in Wentzville for 23 years. Oh my goodness. Got 3 kiddos, who are now stepping into their adult life. That keeps us busy. Some things that I'm very, very passionate about. Those who are friends with me on Facebook know I love to cook. I'm constantly cooking and entertaining and feeding and nourishing people. I like to garden, throw in a little bit of yoga. Probably need a little more of that. But yeah, so that's a little bit about me.
Okay, feed and nourish with the food as well as the information when it comes to home loans. And that's something I didn't know. You beat the Wentzville rush 23 years ago.
I did.
Yeah, it probably does not look anything like what it looks like now.
No, the population has gone from 16,000 to 52,000.
Yeah.
And so that's affected real estate taxes a little bit because we
Right.
built 14 schools and 3 fire stations. So,
Yeah, yeah, but I'm sure that equity is looking pretty good. On the subject
yeah.
of that, your company, Flat Branch, recently rolled out a new HELOC product. Curious to know with the HELOC, what makes this program different and who do you think it's best suited for?
Well, I mean, thankfully, we all know that so many people have so much equity in their homes right now, and you want to be able to tap into that. Now, this HELOC, home equity line of credit, and I've been doing this a long time. Traditionally, you would, go to your community bank or whatever, take 3 weeks, 4 weeks to close. This thing is highly, highly automated. There's a lot of AI behind it. And literally, I can, have a conversation with a client, plug in a little information, their name and their address, literally. And internally, this system behind this HELOC, it's called Figure. We'll run an automated title report, an automated AVM, which is kind of like an automated appraisal. Because like these systems now these days have so much data in them that they know certain addresses and certain zip codes and all the real estate that is sold in those areas. So they can, oh, well, here's about what that house is worth. And anyhow, so literally from start to finish, name, it does a credit soft pull, not a hard pull, but a credit soft pull initially. And then you throw in some of your banking information connecting to the banking. which then automates the income that's coming into your life. So that, and then it pulls a soft credit report. So this system literally calculates, income versus debts, home value, and you can do start to finish literally in like 24 to 48 hours.
Oh, wow.
And I
Okay.
mean, start application, pick your options, connect your banking, and be scheduling a closing with a notary within 2 or 3 days. Like it's insane. So it's fast.
I didn't know that. So the initially a soft pull. So for somebody who's just kind of wanting to maybe dabble a bit, doesn't necessarily have the utmost intention to tap into their equity, but
Yeah.
they could look
They
at
just
this
want to
and
check out their options. Yeah.
yeah,
Yeah.
with no real, I mean, negative ramifications from the sound of it. Is that
Not at all. Not at
okay?
all. I'm gonna coin it as the firecracker HELOC, because it's
Fire.
like as fast as a firecracker. It's like boom, there you go. There's your money.
Absolutely. I've recently seen some buyers utilize this for uh, freeing up that money to not only, purchase the next home without the obligation or without the hassle of doing the simultaneous close, the same day close that,
Yeah.
so I mean, we can execute as professionals. We're good at doing that. But I've had folks kind of avoid that route by tapping into this equity. And I've also
Hmm.
seen some folks keep their primary residence, and utilize these funds to go out and purchase something else and rent that previous home. Is that
Yeah.
something
Yeah.
that kind of fits into what you're seeing with this, or?
Absolutely. And matter of fact, as long as I've been in mortgage lending, this is the one and only home equity line of credit that I even have ever known of that will allow you to get a line of credit on an investment property and a second home.
That's good
Because
information.
typically HELOCs are only for primary residence, but this will allow primary, second, and investment property. And yeah, I mean, in the way of investment property stuff, there's a strategy that a good handful of my clients have used, because everybody still wants to think about the COVID mortgage rates, back in 2020 through 2022, the 2 to 3% mortgage rates, which quite frankly, and you and I have talked about this, I hope we never see that again, because if we see 2 to 3% mortgage rates, then the entire world is shut down. None of us ever want that again.
Right.
But there are, there's a quality of life that certain people need, like say, they have child number 2 or child number 3 coming, but they're in their first starter home and the walls are caving in, but that mortgage rate on that house is like 2.5 or 3%. Well, guess what? You can turn that house into an investment property that's at 2 or 3%. And then
Yeah.
go buy the new house. Yeah, you probably end up with, a 6% something or other, which is where we're at, right now.
Right.
Great strategy. You turn one house into 2.
Yeah. Yeah. The wheels are kind of turning on who I can, share this information with, because we've got a lot of investment minded folks that are always kind of scratching and clawing at the next best idea for financing. So,
Yeah,
oh,
this fast HELOC is a great tool for that.
awesome. 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 Shifting gears just a little bit, but keeping with the theme, as we head into the fourth quarter, what are your thoughts on where the housing and lending market is headed? And I'm curious to know, are there any trends buyers and homeowners should be paying attention to?
Okay, well, so here's the thing, and those who know me have heard me say this 1,000 times. I think the demand on housing is not going to go anywhere anytime soon. Um, you know what I'm going to say, because we have too many humans and not enough houses. Okay. We have the 3 largest generations born, meaning boomers, millennials, and right behind them, Gen Z, all in the housing market at the same time. The boomers are downsizing, millennials and Gen Z are entering, the housing market. So I don't think the demand on housing is going to go anywhere anytime soon, which is good because that'll help us keep like a normal level of appreciation. Appreciation kind of in line with those COVID mortgage rates. 15% appreciation is not a good thing. I mean, it is for any given year, but it can't continue because then housing is just not going to be affordable. But so now you and I are both experiencing things are kind of calming down in certain areas, not every area, but things are calming down in certain areas, meaning, there's not the buyer competition is not as fierce as it has been for the last 2 to 3 years, right? The bidding wars, 5, 10, 15 contracts on the same house. Things are calming down. which is a really good thing. And again, it's not in every area. I've got some offers that were made last night that are in multiple offers and they're competing for the house. But anyhow, so as we head into the fourth quarter, this is traditionally what I see. Okay, this is how what I call the rhythm of the market in any given 12 months. So today is October 3rd. Okay, so we're heading into the holiday season, and this is what I lovingly call the holiday rush season of home buying, because there's a lot of people out there. It could be that their lease is ending and they got to get out of the apartment. They want to buy a home. What I'll say is heading into the fourth quarter, you know this and I know this, people that are out there looking at homes when it's 20, 30 degrees or 40 degrees outside, they're serious buyers. But there's a lot of people, they just simply say, I want to be in my new home before Thanksgiving, or I want to be in my new home before Christmas or before the end of the year. Okay. And then, so we've got our holiday rush is what I call it. Then we step into January, February, that's kind of a lull in the housing market, but we on the mortgage side of things in January and February, we actually get a rush of applications, mortgage applications for pre-approval. And that's what I call, those are the New Year's resolution buyers, because they want to prepare to buy a house in 2026. Okay. So we have the holiday rush, New Year's, and again, depending on the weather, believe it or not, though, we're animals, right? So the weather, if the weather's terrible, there's not a lot of people out there looking at homes. But once the weather breaks, then guess what happens? We step into the spring market, which is March, April, May, June, July, August. So that's typically the busiest 6 months of the year, as we know.
Yep.
And then August happens, and then we get a little back to school slump, is what I call it. And then we step right back into the holiday rush. And that's kind of the normal rhythm of the market, in my humble opinion. Yeah. So I think heading into the fourth quarter, I think there'll be plenty of activity.
Plenty of activity. And you touched on something to begin that. You mentioned that you are noticing some calmer markets, areas that aren't getting as much attention as they have in the past 2-3 years. And I think that's important for some of these prospective buyers to listen in on, because there's a lot of them, friends of mine, family, that have kind of sat on the sidelines and said, Giuseppe, we're just going to hold off until things cool off. It's just, we're not interested in, this level of competition. And right now, talking with people, it's not that way in a lot of these areas. Granted,
it's actually a great time to buy. Honestly, it's a great time to buy, because what if there's a house that you absolutely love and the days on market for that listing is like 30, 35, 40?
Yeah.
You could maybe get a deal. You might get them to accept a contingency, meaning I want to buy your house, but I got to sell my house first. If they've been on the market for 30, 40, 50 days, there's some negotiating power for buyers out there now, which we haven't seen in the last couple of years. So.
Absolutely. Yeah. Buyer leverage is at the highest I've seen it in 4 or 5 years. So
yeah,
that's important to note. And transitioning into those folks that are looking to do something, planning to buy in the next 6-12 months, early part of 26, maybe before then, or before the holidays this year. What steps should they be taking now to be financially ready when that time does come?
Anybody and everybody, the best thing that you can do to prepare is honestly to step in and get a pre-approval. You know what I mean? With a mortgage lender, with a loan officer, like start having the conversation, because again, we can do a credit soft pull. It doesn't have to be a hard pull where we're doing an inquiry. And quite frankly, that's a misnomer anyhow. People think that a credit inquiry is going to hurt your credit. It's actually only about 5% of the algorithm of a credit score inquiries are. But anyhow, we can do a soft pull, see where your credit score is, because we all know the better your credit score is, typically the better the financing terms are. So if there's anything that you could tweak, I've had people's credit scores jump 40 points just by paying down a credit card $500. You know what I mean? So there's things that we can do to prepare for that. But I always tell everybody, just know where your credit stands. Keep as much money in the bank as possible. That's the best advice I have for anybody. And really start the conversation at least 90 days out. You and I know that you meet somebody on a Friday and they're out looking at a house on Saturday, and they don't have their pre-approval in place, right? And then you send them to me, and we do what I call as the fire drill on Saturday, meaning I meet them at 11 o'clock on Saturday afternoon, Saturday, and they need to make an offer by 5 p.m. They're like,
Right.
"Hi, Tracy, can I have a $500,000?" Yes, maybe. So just being prepared. Yeah, I'd say every bit of 60 to 90 days prior to when you think, if or even 6 months prior to when you think you're going to be wanting to buy a home.
Absolutely. Yeah, I love that. I mean, shopping, I call it window shopping without the pre-approval is just that. I mean, we're looking at things that we don't know whether or not we can afford or if it fits our
Yeah.
kind of monthly budget that we have set in mind. So taking those steps 90 days prior to really wanting to be closed on something. And then the information on the soft pull, I think, is important. A lot of people,
Hmm.
myself included, for many years, okay, if we're going to go about this pre-approval process, we really need to be locked in because it's going to have an effect on our credit, and that's not necessarily the case.
Not
If
necessarily. No,
Yeah,
no.
so,
And for the record, like you and I've had fire drills, like we can handle it when duty calls. We can handle it. But you want somebody's home purchase to be as enjoyable as possible, not stressful. Moving is stressful enough. You know what I mean?
absolutely. That's why they hire us to make it as less stressful as possible. I know we take pride in that. Uh,
Yep.
Moving on, going back to our current homeowners and the idea of equity, those who have built up a good amount of equity over the last few years, which many have, beyond home improvements, what are some smart and safe ways you're seeing people put that equity to work?
Okay. So smart and safe ways. I'm not going to really address that like a financial advisor would, because that's what financial advisors are there for. But again, I think with the calming of the market in certain areas, and again, if days on market are picking up, obviously, if you're wanting to move into a bigger, better home, bigger, better area, new school district, whatever, you know, don't be afraid to write a contingent offer, because you got that equity to help you get the next home. That HELOC we talked about earlier, you could, maybe do that as well. But for people who are staying in their homes, I've got a case study here. So because people have so much equity right now, we're also seeing, because I'm a debt advisor, I'm not a financial advisor, right? They advise assets, I advise on debt. And we're seeing debt at really high levels. Obviously inflation has a lot to do with that. Just the cost of things, especially after our COVID market, cost of things has just gone up so much. And so I'm seeing a lot of debt. And, believe it or not, cash out refinance, consolidating debt. I have a family, they literally took their 30-year mortgage that was at 3.25%. We did it. They had a lot of credit card debt. They had some installment debt, but they had a boatload of equity. I think they owed 270 on their house that was worth 700,000. So we did a cash out refinance. We consolidated about $150,000 worth of their debt and took them to a 7.5% interest rate, but it improved their cash flow, meaning bills going out, by $2,500 a month, improve their cash flow. So essentially they could just take that $2,500 a month and just keep making, pay that additional towards the mortgage. Well, here's what we did. So we did the cash out refinance, took them from 3.25 to 7.5. And then in August, September of 2024, remember we saw rates like tick down. We saw 5 for the first time in a couple of years.
Yep.
And what I did at that point is we refinanced them again, but we cut them down to a 20-year mortgage. So they literally went from a 30-year mortgage to a 20-year mortgage, from 7.5% down to 5.75, I think is what we got them, or 5.5. And they knocked 10 years of mortgage payments off, and the mortgage payment remained the same. Isn't
Very
that
good.
crazy?
That's awesome.
Which is what I love about my job, because and then I did the calculation, cutting 10 years off that mortgage, they kissed like $365,000 worth of mortgage payments goodbye, but their monthly mortgage payment didn't change at all.
Yeah,
So
no,
that's the stuff I love. You can tell I get excited about that.
yeah, and I've witnessed it firsthand in an effort to keep names out of it. You had helped some folks, a younger couple with some kiddos. Um, what I call looking at it from like a holistic lens. You look
Yeah.
at the full full approach. Hey guys, what's your credit card debt? What are we looking like on vehicles? And I think paying off the vehicle for these folks was actually going to, I mean, like you just said, save them I don't know how many dollars a
No, I
month.
remember. I
Yeah,
remember
maybe
what we
lower
did with
down.
them because it made a lot of sense. You
Mhm.
know, they sold a house and bought a house,
Yep.
and if I recall, they had about $70,000 to work with, and they wanted to put all $70,000 down on the house. And I'm like, no, 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 no. Put $40,000 down on the house. Pay off the $30,000 balance on your vehicle with a $900 car payment. You know, because, and so, yeah, they borrowed a little bit more money on the house, but $30,000 on a home mortgage is like $180 a month. Whereas $30,000 paying off that car improved their cash flow by $900 a month. So that's the stuff that I do. Those are the conversations I have.
It's awesome. It's awesome. I mean, yeah, unlike anything I've really experienced in this industry, the way you approach things, and I think that's just the best.
Thank you so much.
Absolutely.
I take it seriously. You know this.
Yeah, 24 years in, I mean, the experience speaks for itself, and yeah, the amount of business that you do. So, yeah, I wouldn't expect anything less.
Well, gosh, like, I mean, debt. Oh my gosh. And there's even scripture on this, Giuseppe, you know this, that the the debtor, the borrower becomes a slave to the debt.
Yeah, absolutely.
And it's in Matthew somewhere. I don't remember that exact scripture, but you know, you don't want to have to work just to pay debt. Yeah, it's part of life, okay? But when it gets out of control, you've got to ask for help. You got to ask for help for people who see it and deal with it every day, you know?
Absolutely. Absolutely. Yeah, like I said, I love the approach. Wrapping things up here, I'm curious to know from your perspective as a lender, what's one common myth or misconception about mortgages that you would like to set the record straight on? Giving you
Okay.
the opportunity here, set the record straight.
There's actually a couple of things.
Okay.
So, one, people, especially our first time buyers, they are scared of the process. Okay. They're like, oh my gosh. But here's the thing, it's better to know where you stand, you know, than to not know so that
Mhm.
you can plan your life. Where am I
Right.
going to live? What's best for my family? What are my finances going to look like? Um, so pre-approval, and again, you know, I try and keep things as simple as possible in the conversations I have with people. Basically, mortgage is the largest amount of money you're ever going to borrow. All I simply have to do is to prove if we give you the money, you can pay it back. Okay, it's that simple, and that's where the mortgage application comes in. You know, where do you work? You know, how's your income? How's your debt? You know, those sorts of things. So one misnomer again, it doesn't have to be complicated. I try and simplify things.
Yeah.
The second thing, this one crossed my desk last week. This gal, she was on YouTube, and she's talking about how much interest you pay over the life of a mortgage. Okay, which, if this is if and only if you buy the house, you stay in the house for 30 years, you don't ever refinance, you never move, you never sell, you never. And yeah, if you don't make any changes, and interest rates never ever change, okay, you know, then you end up paying, you know, hundreds of thousands of dollars in interest over a 30-year mortgage. My goal for my clients, um, if you get it, you know, the goal is, first of all, get you in your home. Okay. Um, and then if the time comes and we look at a refinance, we're either going to restructure your debts, or if you're refinancing like the case study I talked about, let's cut the term. Keep the payment within $100. I have people refinancing right now that are doing exactly that. They're going from a 30-year mortgage to a 20-year mortgage or a 15-year mortgage, and their payment is staying within a couple $100 of what the current payment is, but they're knocking years off. I am a huge fan of being debt free. So what I try and do is I show my clients how to pay off their mortgage the fastest way possible. Because you don't want to pay all that interest, you know, over many, many years. But I will also say, I think it was Franklin Delano Roosevelt. Was it him? I think it was. And there's a saying out there, you know, he felt that real estate, when handled properly and managed wisely and eventually owned free and clear, is possibly one of the safest investments you could ever make.
I love it.
You guys can Google that. It's out there somewhere.
No, I love it. And I think that's a great way to kind of sum this up. I mean, the power of real estate is it's a very real thing, and communicating with folks like yourself who have the experience and the guidance and just the ingrained ability to kind of, from a firsthand experience, teach and not only teach, but like love on these individuals.
Yeah.
It's a genuine process. And I know you take pride, like we talked about, in making it as stress free on folks as you possibly can. And I attest to that when it comes to how you operate. I
Well,
couldn't,
thank you. I
yeah,
always tell everybody, I'm like, listen, you're only going to do this a couple times in your life. Giuseppe and I do it every day, every single day, you
right.
know?
Let us
So let
handle
us help.
it. Yeah, let us help. Tracy, thank you so much. I really appreciate the time today.
I
I'm
appreciate you, and I'm flattered, that you wanted to have this conversation. I hope it's very, very helpful to anybody, any of your clients or whoever is going to see some of these conversations.
absolutely. Well, I'll talk to you soon, okay?
Okay. All right. Thanks.